Shifting gears then, a stock that's bucking the trend today is Mphasis. 3,083 is where the stock is currently trading at. The profits come in higher by about 5% to 358 crore rupees. The company saw 4 large deals as well that were signed in Q3, and they've got their overall margins coming in flat at 15.1%. To discuss the numbers in greater detail, we're joined this morning by Nitin Rakesh, the CEO at Mphasis, as well as Manish Dugar, the CFO of the company. Thank you so much, gentlemen, for being with us. Going to begin with you then, Nitin, first. Strong cross-currency growth this time around of 7.8% witnessed in the quarter. First up, can you just split the growth between the organic and your inorganic business on account of the Blink acquisition?
Yeah, so I think we actually broke out the organic and the inorganic portion. Roughly around 10 million of the revenues is impacting through the acquisition. So you can account for that from a growth perspective compared to last quarter where it was about 1 million. So total impact is about 9 million in the quarterly revenues.
Now, I was flagging off that your margins this time around have come in a little bit lower than what the guided range was of 15.5% thereabouts to 17%. What has led to the margin pressure this quarter? And do you think that margins will continue to linger at these levels? What do you think will be the sustainable run rate for your margins going forward, given the fact that there are headwinds when it comes to talent as well as discretionary expenses?
I don't think it's a miss per se because, last quarter we closed an acquisition of Blink where we called out for a 80 to 100 pips impact purely based on the acquisition for amortization and bonus purposes that we are actually amortizing over the next 2 years. So if you look at an organic basis, we are actually well within the band of around 16, 15.5 to 17. We're right around 16 plus if you add back the 100 bips that we called out for last quarter. So we didn't change the band on an organic basis. We're still maintaining it. The other thing that we should also call out is this quarter we also had an allocation of ESOPs and RSUs as per the AGM approval that happened in September. And we've actually assumed another expense this quarter, but we managed to maintain that through operating efficiency. So I think on the margin front, sustainability of organic operating margin in the band will continue to be our focus. And while driving for growth, we actually have managed to maintain margins. Manish, I don't know if you want to add anything to that.
Right. But Manish, client mining has been a key focus area, as Nitin just told us, that lead conversations have been pretty strong.
Absolutely. As a company, our focus has been inch wide, mile deep, and we have chosen to work with customers where we really believe we can add value. And as you know, unless and until we deliver value, it doesn't translate to revenue. Just TCP wins and customer logos don't help. And the whole cathedral motion, as we call it internally, once we have identified the client that we can scale, we make sure that we put that cathedral motion in place. It starts with leadership investment, which means regular reviews, which means proposals to the customer of solution to problems, which itself the customer hasn't thought of yet. And as we execute on those projects one after the other, very soon the customer starts looking at us as someone who can not just execute, but who can guide and execute. And that puts us in a place where we slowly become strategic partners. And then it is not about us, responding to RFPs and winning business. It's more about us working with the customer and making it happen for them. And that is what gets us to, a scale. And given our choice of customers, which we believe we can scale, we have been really differentiated relative to our peer group in our ability to grow accounts to 100 million, 75 million. And that has been a consistent, record for us over the years. If you were to look at quarter on quarter, we have added in every segment, but, more importantly in the 50, 75 and 100 million. And we report numbers on a, trailing 12-month basis, but on a quarterly run rate basis, I think the numbers look even better.
Nitin, but large deal momentum continues to be strong for you. I was just wondering whether or not this $300 million quarterly run rate is going to continue, or do you think there is scope for some moderation at some point, perhaps?
Again, we've very consistently delivered above 200 million in net new TCV every quarter for almost, I would say, 8 quarters now. I think the reality is that large deals by definition are lumpy. You cannot predict which quarter they will close, what frequency they will close with, but the reality is that we've consistently closed between, either 2 or 3 deals every quarter, and this time we have 4. I think still a healthy enough pipeline for large deals. So I think we can't comment on what number we will sustain at. But given the track record in the last few quarters, you can see that the trajectory has actually been fairly strong. And I think we'll continue to focus the team on making sure that we are generating pipeline, closing deals, and converting to revenue at a similar track record.
Manish, so just to get right back to that Blink acquisition, give us a sense as to how it's scaling up, and is there anything else that's in the pipeline? I'm sure investors are curious to know. Any more acquisitions on the cards?
So clearly, we are very, very happy with the progress we have seen on Blink. As we had talked about during the announcement of Blink, we did the transaction with 4 objectives and 4 criterion in mind: leadership accretive, growth accretive, client accretive, and also bottom line accretive. And on all 4 counts, it's firing well. We had assumed synergies that will accrue, which is beyond what they did, as a business themselves. And happy to note that, already we have started seeing traction in our existing client base in selling Blink services, and not just in terms of pipeline, but some of them have converted into TCVs as well. We had a certain plan given by the management for the year, and there was an optimistic view and a realistic view, and they have actually hit the numbers beyond the optimistic for the year as well. So very happy with the Blink transaction, and the capability that it brings has opened a lot of conversations and doors for us, increasing the TAM for the company, which is what one of the key objectives was. As we go forward, from an M&A perspective, competence-based acquisition and acquiring businesses, which gives us those 4 vectors, whether it is clients, whether it is leadership, whether it is competence, and whether it is growth. I think those continue to be things that we look for. We announced a partnership, to build a COE in a very interesting space, blockchain and crypto today. And we have discussions which continue to happen on M&A, and we have already talked about including Blackstone, that we are willing to now look at more aggressively on M&A. So yes, that would be a clear way to use our cash and grow the business.
So Nitin, before we let you give us a sense as to what the outlook is now for FY23 for the company. Will we continue to expect this 25% plus revenue growth with a margin of about 16 to 17%, safe to say?
Yeah, I think I can give you a little bit of a color. As I mentioned earlier, the fact that the pipeline is still fairly healthy and continues to grow both sequentially and YY basis, despite record TCV conversion, the fact that we have a 9-month YTD TCV that is 25% more than last year 9 months, basically gives us a good order backlog to execute on. And I think from that perspective, definitely the growth rates look sustainable. Question really obviously is, at what clip and what conversion rates we can sustain going forward. So I think we'll have a little bit more color on FY23 by the time we meet next at the end of Q4. But I think from a demand perspective, we do expect that the demand tailwinds that we've seen in the last 6 quarters, especially in the last 4 quarters, will continue to sustain at least for the foreseeable future. I think from a margin perspective, there are lots of moving parts, puts and takes. It isn't just about discretionary spend. I think all the pyramid actions, the supply chain restructuring that we were able to carry out, where this is kind of a pivot quarter. I think some of that will start showing up back into our operating margin. And then we have to make a decision, as we get into FY23, how much of that do we continue to invest for growth like we've done in the last, I would say 2 years, versus taking it back into the EBIT line. So I think we will again update you that more on the Q4 ending call, where we can give you a little bit more color on the FY23 guidance. But I think the trajectory in terms of bias is definitely upwards, given all the actions that we've taken and the work we've done in continuing to sustain margins this year.
Okay, thank you so much, both of you, for joining in with that quick take on how the earnings went by word, and of course, what's the outlook as well going forward. But on that